Word up, guys. All right, so today's video, I want to give you guys some metrics, show you a little bit where liquidity is going, show you the current state of DeFi. I'm going to try to do these either once a month or every 2 weeks. So if you guys like video content like this, make sure you guys like and subscribe. That way you guys are notified every time I make a new one. I'm going to go over 2 of the current narratives, and in the next video, I'm also going to give a pretty sweet DeFi strategy. So make sure you guys stay tuned. If you guys are in the Discord, you already have access to that strategy. Let's go ahead and talk about the chains, TVL, and talk about where liquidity is going. For the most part, liquidity is, it's okay on Polygon. It's definitely going to the layer 2s and starting to trend a little bit into Phantom and of course mainnet Ethereum. But overall, liquidity in general for DeFi is literally just leaving the markets. It's down only, just the TVL. And with the token prices, that doesn't help at all because a lot of the token liquidity is priced in the token itself. And you're probably asking yourself like, wait, Binance Smart Chain, it's only down 8% in a month. Or you're seeing something like, oh man, Avalanche TVL is up 3% or Phantom's TVL is up 6%. You gotta take that with a grain of salt. It's mainly due to the price increase because remember the TVL has a lot of that token on that chain. So as the token price goes up, the TVL in dollar terms is naturally going to go up, which is the dollar terms here. And as you can see here, it's already increased more than 10%. So it's easy enough to see an increase in 5% in TVL. Now BNB has also been holding strong as well because you can see here the token has just been holding up well. And Phantom is also seeing an increase, and same with the Polygon token. And that's due to the fact that there was a price increase. And there is also a little bit of a narrative going around Phantom. I'll explain that later in this video. You can also use a site like Uniwhale to be able to see some metrics to see what's actually happening with the liquidity on the chain. As you can see here, red, which are the withdrawals on Avalanche, are dwarfing the deposits, which means more money is leaving the chain than is being deposited. What that means is liquidity is leaving, and when liquidity is leaving, a lot of these farming tokens are inflationary. So if people are not buying the coin, the token's going down in price because it's being diluted. With Polygon, on the other hand, you can see that deposits are actually dwarfing withdrawals. Now, of course, there's always going to be withdrawals on every chain, even on Arbitrum and Optimism. I'll show you guys those charts later so you can see it. But some of the older DeFi chains like Polygon, Avalanche, Phantom, those are going to see outflows because they don't have as much of a liquidity mining incentive to attract those users. It's because they're just tired chains. They've already exhausted a lot of the rewards. Sure, they still have some rewards giving out in some of the different protocols, and they have the other DeFi protocols on there, but this is just something to keep in mind. So again, take the TVL with a grain of salt, understanding that the token price has an effect on the TVL of the chain, besides Arbitrum, of course. So overall, Polygon, not looking too bad. Avalanche, not so much, not looking too healthy. And that was probably due, in fact, with 3 Arrows Capital, them crashing and all kinds of garbage. Arbitrum, on the other hand, looks extremely healthy. Sure, it's going down. It's not as good as it was before, but still, this is a strong trend. You can see here that there's thousands of dollars coming into Arbitrum every single day. You can see here the historical deposits are outnumbering the withdrawals, whereas with Polygon, it's the opposite. Or with Avalanche, it's much more the opposite. It's it's basically 3-to-1 ratios. Now let's take a look at Optimism. Optimism is a little bit slower. They did already receive a lot of the inflows around when the OP token was launched, so you are starting to see less people depositing onto the chain. As you can see, this is in the hundreds, whereas Arbitrum was in the thousands. It's because a lot more people were coming over. Optimism, there are still people coming over, and it's good to see that they aren't withdrawing, so they aren't just leaving. So here's a bigger chart on Optimism. You can see overall it's been about a mixed bag of 50-50 with deposits and withdrawals. It's mainly around the token, people getting the token, dumping the token, and moving to a different chain. I mean, there is still stuff to do on Optimism, but right now there is a lot more speculation around Arbitrum, people trying to farm the token, get the token, and they also had their chain upgrade, and the fees are actually cheaper than Optimism. Now, Optimism is still cheap, Don't get me wrong, but Arbitrum is actually a lot cheaper with the Nitro upgrade. I'll show you the TVL liquidity movement on Phantom. You can see here they had a mass exodus of liquidity, but you're starting to see the deposits trend up. Now this is a good sign. We're starting to see the withdrawals trending down. Now, of course, this doesn't mean that it's going to keep going in this direction, but the narrative I do see around Phantom has to do with this 30-year runway. If you guys haven't taken the time to look into this article about Phantom and Andre Cronje kind of giving the story of what was up, it's a really good read. I mean, it's only going to take you about 5 minutes, but TLDR, they have a 30-year runway based on the math that they provided for the cost to keep the Phantom chain running, as well as the treasury that they have for the runway. So this is a breakdown on November 2022, which is now. They have over 450 million Phantom, over 100 million in stables, 100 million in crypto assets, 50 million non-crypto assets, and their salary burn rate is only $7 million. This is where they're getting the 30 years without even touching the Phantom. Now, what was really interesting in here was January 14th. It talks about an exchange asking us for $300 million for a listing. Don't know who that is, but that is nutso for a listing price. I hope that's a typo, but if that was Coinbase, geez, that's nuts. But anyways, take a look into this. This could be potentially a narrative for Phantom with, oh, whoa, Phantom's going to live because it has a 30-year runway. Right now, the two predominant narratives have to do with sustainable yields and runway, the ones that can last and survive through the bear market. The sustainable yield aspect of it would be things like GMX protocol and protocols built around GMX, or other protocols that are earning a sustainable yield, which could be through like options, derivatives, etc. If you want to learn more about options and sustainable yield platforms, you can check out some of my previous videos. And also one other interesting trend I want to talk about has to do with Arbitrum and the layer 2 wars. A lot of people are migrating to layer 2, as you guys saw in the data. Well, Polygon, you can kind of consider them like a sidechain. But you can see here Arbitrum and Optimism, their deposits are actually in the green, which is good to see, and their withdrawals are a bit less. But people are farming the OP token, and with Arbitrum, people are speculating on that potential airdrop. So that's kind of what they're farming. So again, that's a narrative as well. I also want to talk a little more about the Phantom article, the fact that it showed good asset management and what you should do with your funds. As you can see here, this basically explained how they were able to grow their treasury through farming, getting their principal back, protecting their assets. And I mean, for example, in July 12th, 2020, they basically had some Phantom off the market. Their treasury was 8 million, and this was coming from farming the comp and SNX token. Instead of being bag holders, they took profits. I mean, there's nothing wrong with comp and the SNX token. And in fact, I do like synthetics, not so much comp, but they took advantage of the situation and got profits and built their treasury. So now they're in a good situation where they have a 30-year runway. Anyways, guys, thanks for tuning in. Hope you guys enjoyed that video. Let's go ahead and hit you guys with a wisdom one-liner. And by the way, guys, if you guys enjoyed this video, leave a comment below. Tell me what you guys think of it. Make sure you guys smash up the like, subscribe to the channel. And if you guys want to join the Discord, there's a link in the description below. You guys can basically see what I'm doing in the markets and stay up to date. Proverbs chapter 12, verses 11. Those who work their land will have abundant food, but those who chase fantasies have no sense. Don't be lazy. Get off them buns. See ya.